It's really hard to compete in the L1 market. It's extraordinarily crowded. There's not a clear wedge in the market other than these current ecosystems compounding their current markets. There's also like this problem in crypto where founders get very religious. You can think of things like ETH alignment as like one of these like religious beliefs where people will ignore like the writing on the wall and just like stay like strong headed in one direction.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research, where I'm joined by Danny and Ryan from Blockworks Research to talk about all that is happening in the markets, or rather all that is not happening in the markets. Before we get started, Danny, do you want to give a little overview of what you think is interesting?
Yeah, I think the markets right now, it's it's an interesting spot. Like, I'm not a macro guy, but I sort of follow the macro scene and experts in that area, and I think we've got kind of some maybe rocky times still ahead of us potentially. But it. I think if you look forward and you look at the potential like positive things on the horizon with potential election, maybe changes in regulatory stance, or kind of just going into the end of the year and into next year, we've been messing around here at these levels, and like Bitcoin has kind of been grabbing and maybe going slightly lower, and we've seen alts like take hits. It does feel like, at least personally for myself, if I had extra cash, like things that I like and I'm looking at, like I would maybe want to be picking some of those off the floor. Maybe now is near that time to do so, or maybe it comes in another month. I'm not really sure, but I think, alts have been hit, fairly hard from the highs earlier this year. So this is just one of those interesting times when there's a lull, things are down, and, for stuff that is compelling, it's, we could go lower and we could go higher, and that's kind of always the case, but it's, compared to the valuations that we saw earlier in this year, they are significantly lower today. And so it's like a much more, there's a little bit more of an attractive opportunity here, for certain alts and things and other tokens, that maybe you wouldn't have wanted to buy like in March at, peak valuations and insane numbers.
Yeah, it'd be insane if anybody here bought anything in March, man. That would their portfolio would look crazy right now. Yeah, I generally agree with you. I'm not gonna macro LARP, but things do feel more attractive than they were in March. Prices are much lower, and they continue to go lower and lower. It's unexpectedly. Ryan, what do you think? You grew out this incredible stubble over the past few weeks, obviously. Has it come with extra wisdom? What are we looking at?
I mean, the product cycle has certainly slowed. I think that's the most interesting change in the backdrop. Um, Seeing fewer and fewer projects come to market. Perhaps the devs are tapped out. There's some bright spots, potentially in like GameFi, SocialFi, um, that we're hearing about deal flow on the VC side of things, but that's going to take some time. Um, I mean, look, this wasn't completely unforeseeable. We spoke about 2 or 3 months back about how um, July and August are terrible months for volumes, and in a market that needs like constant attention and new capital to like maintain current valuations. Given that summer lull, it's not a surprise, especially like given the large participation from some governments and institutions, the Mt. Gox redistributions, etc. Um, I mean, look, it's all the regulatory story right now, right? If you're trading this, if you have a sub 12-month time horizon, it's very much a regulatory story. I think that the correlation between Trump's odds of winning the election, and Bitcoin have been oscillating, but have been more positive than not. So, I mean, I think from a trading perspective, like that's all that matters going into the end of the year.
Fair enough. One thing you brought up there is the product cycle, and specifically that we're still seeing interest in SocialFi. I I was thinking about that quite a bit yesterday and today. Obviously, FriendTech renounced contract ownership today, which means that I think they're done developing the contracts. It's kind of a crazy thing to do after making 50 mil on fees, and raising God knows how much from Paradigm, and then saying, "Hey guys, you know what? We gave it our best. 8 months out, we're done." Um, but I was thinking about it, and well, how would you guys have done FriendTech, such that it did not die out? Obviously, there's some interest in this product of um, both speculating on people's prices based on their clout, as well as paying for access to chat to them. As far as I understand, there's a traditional alternative to that chatting thing, where you can pay for time with founders. Correct me if I'm wrong. Um, and I think that's speculation of people's prices. We're seeing it a bit with Fantasy Top, but yeah, how would you guys have done it? Is this something you think about? Do you ever think about Racer and his tweets, or is it done? What's the consensus?
I don't think about Racer. I do think about the product and other products that could be interesting. I think there's something difficult here in that, like, I think there are elements to both parts, like the private chats, getting access to that, um, the speculation on the price of the keys is interesting as well. I don't know if the specific curve model, like pricing model that was applied here, and having only that made the most sense. Like they added some features later, that probably too late, but you know, maybe the opportunity to have flat pricing models for just pure access without the speculation as well as the speculative options. Like I think probably just having a bit more optionality would have helped early on. The other problems that they had early were just like the slowness and like bugginess of the application itself. It was pretty god awful to use early on. I think fixes kind of came slowly, but um, when the traditional like options exist to like do this type of thing, it's hard to want to use like a bad product experience. So certainly figuring those things out, especially like when you're getting the investment, like they had the money to fix that stuff. But I think playing around a little bit more, like I just I don't think that the iteration was fast enough. Like I think when you have some like initial success like that really quickly, like the goal should be then to like very quickly take feedback or just come out with like new additional features that maybe people are clamoring for, especially like on the creator side, if the creators are seeing things that like they think is helpful, or the users themselves, like, you know, how they find more value in actually using the app. And we just didn't see that happen. And I think that's where the key failure was. Um, but I think they had like all of that, some of the elements were there in terms of like getting people interested in it. And it would just, there wasn't enough like additional change to like keep things exciting and keep dropping features that maybe would make the thing more successful in the longer term. Because you can't, like the pricing model like would not make sense. Like let's say you get Iggy Azalea or Kanye West to like drop on this app somehow. Like if they've got a million people, like the prices of their keys are gonna instantly shoot to
Yeah,
insane numbers if they don't have some way to like, you know, if you could have a flat rate key for, you know, $50 that anyone can buy, and it's like a some specific type of access like you see with other platforms like a Patreon or um, you know, other creator fan type relationship platforms. Like there are ways to kind of capitalize on that relationship without having it be purely speculative. But I think, you know, probably some interplay of those two ideas, and maybe, you know, dropping the different ideas on designing the like bonding curve itself, or like that pricing curve. I think that came a little too late as well.
I mean, with 44 mil, they definitely could have hired a bunch of really good devs. and then have figured it out. Ryan, what do you think?
Yeah, I think there are some important lessons that the industry is actually like picked up and is taking to new projects. I think the first and most obvious one, it's actually like a very common playbook in software technology, social media markets, is vampire attacking an existing social network. So if you look at like all the great social networks, they're very much a vampire attack on an existing social network. So if you think of what Facebook did, it vampire attacked college campuses and the existing social networks there. LinkedIn is company social networks, industry social networks. Um, there are countless examples, but I think that that's one thing that FriendTech did that I think Web3 founders are focusing on, crypto founders are focusing on a go forward basis is like, let's tap into these open APIs. Let's provide like a very seamless bridge to like keep this community and like bring the whole thing over instead of trying to build it from scratch, which is much harder. Um, the other thing is asset issuance, and you've seen this in subsequently with Pump Fund or Fantasy Top, is that if you give people a place to issue interesting assets, it's pretty attractive from a speculation perspective, and this industry is quite good at monetizing and creating these like little speculative environments. And if you can get it right, like with Pump.Fun or with FriendTech, like it can go really far. It can generate a lot of revenue. So asset issuance as like being a core social primitive on a go forward basis, I think is something. I think it's really important if you're looking for founders building in the space. Like that's a tried and true, I think, product feature. I think yeah, I think it's pretty obvious that the pricing curve was bad. They should have had a more diverse set of pricing models to choose from as a creator. I don't think it would have been smart to allow them to choose the pricing model themselves. Like just there, it's kind of there's too much granularity there. But if you had a set of like 5 different pricing models or something, like that could have been really useful. And then I think you're seeing this play out in early stage markets today. Like the text only based interaction model is a really hard one to monetize. So like Twitter, for example, the story of Twitter is that investors for a decade have been like, how are you guys going to make money? And like it's still happening today. Obviously, it's not a perfect story with just what's happening with ad revenue on Twitter post Elon, but it's way harder to monetize a text only um, social network versus something a little bit more dynamic, which is why you're seeing like Pump Fun getting into live streaming and Unlonely, solely focused on live streaming and video. They're just more immersive forms of media. And I think it's quite clear that in like the history of social media networks, like the more immersive the media, the stickier it is. So yeah, I think that there are like really good lessons. I think FriendTech was it was obviously a success for the people who participated in it or who built it, and I think it was like a really good lesson for this space. And we're gonna pick up those valuable pieces and make something really interesting going forward.
Okay, I have a few things I want to ask both you guys. First of all, what do we think of crypto's promise um, to empower the creator, the content creator? The reason I'm asking this is because I saw Ryan's favorite at Jason post about OnlyFans' 2023 financial figures, and based on this, OnlyFans lets creators keep 80% of the revenue that they generate, and they take 20%, something along those lines, I think, which is not bad at all. In fact, I would say that's pretty good. And like compared to what was FriendTech, I think it was 15%. So there's really only like a 5% difference over there. Like FriendTech's fees were 15%. Um, so I'm not sure. Like, what's the? I guess two questions is what's the bull case for crypto as a tool to vampire attack content creation platforms, given that they're already giving a decent amount to content creators, and B is, yeah, that's really it. I think it's just like, do we even need it at that point if OnlyFans is giving 80% back? and not do, because I would have assumed they would do like 50-50. 80% is quite a good amount. What do we think?
Yeah, 80%. 80% is a very nice margin. It's hard to compete on that. The your margin is my opportunity story, like it's way less there than I thought. Is it actually 80%? Is that a fact?
Well, it's based on. I mean, I assume Jason wouldn't lie. He's a very nice guy.
Yeah, Calcanus.
Um, yeah. So he
Yeah,
says users spend 6.6 billion USD. 5.3 billion of that goes to creators. So that's 80%.
yeah. I mean, yeah. The story really loses its um, the your margin is my opportunity story really loses its power in that scenario. I think that for empowering creators, like I think it's too broad of a bucket. Um, I think that you have to, if you're making one of these creator monetization platforms, um, you have to focus on creators who are under monetized. It's not clear to me that many creators are under monetized. Um, I mean, what better creator to focus on than like the OnlyFans person than like yeah, there really isn't a better one, right? Like they
No.
probably have like, tough banking relationships. They would benefit from more P2P stuff.
Yeah.
Yeah, it
I
seems
think
tough.
the only like the bull case for crypto here is that I have heard just like people say that one of the issues that people might have is that OnlyFans that like takes away creators' earnings. So I guess that's the bull case of crypto is that once it's paid out, you can't take it back. You can't like claw back. Um, and
Yeah.
obviously, like as decentralized and like as like trustless as something is, it's good. But I don't think the opportunity here is like, oh, creators aren't being paid enough. Like 80% is good. 80% is a lot more than I expected, and I don't think that anybody's going to like meaningfully be able to beat that unless they're like running at a loss.
Yeah, I think there's an open question here as to whether, right, obviously costs of like building out any sort of business to compete with that are gonna, you're gonna need devs, you're gonna need marketing team, et cetera, et cetera. So that's gonna be tough. But I guess there's sort of an open question on whether using like crypto rails, um, having like creators have self custody of their payments, like automatically not needing to manage that for them. Like there may be some ways in which you could design an app similar to this where you sort of save money on the operating costs by kind of via the use of the tech and having that kind of earnings flow work as intended, like on chain, without having to like you know take the earnings and then divvy them out to creators, et cetera. However, it's done today, right? And manage those bank relationships. Um, so that's certainly an opportunity. I do think as well. Like I wanted to comment on the that 80-20 relationship. I know for like live streaming platforms, I guess what I was to say is I'm not super surprised that it's higher than maybe like other platforms, because I think if you look at like a Twitch, for example, like the live streaming giant, they I think many contracts after a certain amount, they change this program all the time, but I believe after a certain amount of subscriptions, a lot of contracts, or maybe historically, are like 70-30. Although I think like Prime subs are maybe 50-50. So, and I would expect obviously like their operating costs, like running the live streaming service, hosting all of those videos and things, like that's got to be way higher. So, it sort of makes sense to me maybe that like a kind of private content that's kind of created and provided by the creator itself, like they should get a bigger cut of that versus like a maybe a Twitch or a YouTube who's hosting all of these like massive servers and storing tons and tons and tons of video data. um, so like directionally, I can see it. I think if there's an opportunity for kind of some decentralized service to eke out that margin, I mean, you make a good point, right? It's like, can you get them another 5%? Maybe is that going to be enough for them to consider using it? I'm not sure. are the questions around like maybe losing access to their funding because of banks enough to maybe cause some creators to consider going the decentralized route and using one of these apps? Maybe so.
Hey guys, Permissionless, the event for crypto natives, is heading west to Salt Lake City, and we're bringing the biggest names in crypto together for an incredible can't miss event. Join me and the rest of Blockworks on October 9th to hear from more than 200 industry titans, including Nick White from Celestia, Shriram from Eigenlayer, and Keone from Monad. The conversations at Permissionless will be covering the hottest themes in crypto, including modularity, restaking, the Bitcoin and Solana ecosystems, AI and crypto, rollups, L2s, institutional adoption, and of course the November election that will be right around the corner. We couldn't be more excited about this event, and it's happening in one of the most beautiful places in the US. Ticket prices will be increasing towards the end of June, so get your ticket today. Make sure to use the code so I get some credit and bragging rights from the rest of the team. Use 0x10 for 10% off on your ticket. One more thing. We're also hosting the Permissionless III Hackathon in collaboration with BiddleBox. The theme this year is a multi-chain future, to build a better cross-chain experience so I don't have to have a heart attack every time I bridge to a new chain. All hackathon participants will receive a free ticket to attend Permissionless. So if you're a developer, come join us in Salt Lake City, team up with fellow devs, and build the multi-chain future. Over the weekend, I saw Ryan Bergman tweet about how he wanted OnlyFans on chain, and there is one that exists. It's on Solana called Only One. And then he was like, "Oh no, that one doesn't work. I need it to be on L2s because the on-chain economy is stronger." And I've been thinking about what that means, the on-chain economy, like being stronger on L2s, and I don't really get it. Like, at what point could it be stronger such that like Solana has more DEX volume compared to other L2s, compared to L2s. There's just more money velocity on that chain as well. Like you can already feel it. There's more happening on the chain. So I don't. Is the argument that like gambling and content creation doesn't go well together? Because Vegas shows that that's not the case. So I don't really. What do you guys think?
I think it's a good point that you make. No, it's nonsense. I think that was just like I don't know. That's just like ETH certified talking points. Um, I think that the more relevant question for payments is like where should payments be? Um, and we're going to kind of venture outside of the creator thing here, but like where should payments be? At crypto at scale is like it's going to be really good for trading. There's going to be people taking risks. There's going to be people paying priority fees to get into blocks. Um, Crypto is necessarily constrained. It's a constrained environment. It's not AWS where you can just pump through transactions. Like there's only so much space per block. So like where should payments be? Should they be where high frequency trading is, or should they be in a different environment? I think that there's like it's all probabilistic, but I think there is a case to be made that like if you want a P2P payments app, like it might be best on an L2, or it might be best in like a similar structure to the way a Visa does it today, where low value um, where low value transactions are not competing with high value transactions. Um, if
Isn't
you
that just
look at
Gnosis L2?
what was that?
Like that's the point of Gnosis L2, right? Gnosis L2. There's nothing else on that
With payments, yeah,
thing
I didn't
except
know.
for
I didn't know
DAI
much about it. Yeah.
payments, and then they have that new Gnosis Pay card. I'm sorry, I cut you off, but
Oh, yeah. I mean, look, you have, if you think about how people trade on NASDAQ, I think they're like a billion hits per second on NASDAQ. That's like opening orders, canceling orders, filling orders. And then there is, the comp of Visa payments transactions per second where it's like 11,000 or something like that. I've heard 50,000, who knows? Um, like why should they all be in the same place? If I'm a validator and I'm a leader and I get to decide who goes in a block, like I'm definitely going to favor all the really high value things. If you think of like skeuomorphic things aren't always bad. They're pretty useful for onboarding people to new technologies. So when you think of like your banking, your checking account versus your investment account. Like that's a pretty useful separation. I don't know. I wouldn't be surprised that in some future state you see like checking account like products that are clearing payments on an L2, and you you see like an investment type account where it's like only hitting like the Solana L1.
That would make sense to me. I think that's the ideal scenario for L2s. I agree with you. It's just like just having completely empty space that you can do whatever low value thing. The only issue is that you want like obviously we'll figure it out as time goes on and we'll figure out what the good like compromise between trustlessness and making something very performant. But I feel like that would be the only issue. Like I wouldn't want to keep my money on something that is potentially like stoppable and that I can't escape from. Um, but I'm sure we'll figure it out. There's no need to think too much about that.
Yeah, I do think. I mean, it's not maybe directly relevant to the point, but I do think like kind of pontificating about what that looks like in the future. I don't know that that really matters for like the app developers today. You can build OnlyFans on chain on any decently fast and cheap chain today, and if the product is successful, then cool. And if there's a problem down the line where you should be on an L2 or not, or on this place or that place, like then you can move it. Like we've seen apps have like DYDX has gone from being on chain to do it to its own chain. Like there's apps today that are exploring with like all these possibilities or moving from one to the other. For them, I don't think it matters. Just make like an interesting product, and get it to market and get people using it. And I like this talk from Ryan about like where it should be. Like it doesn't matter that much. Like maybe from a cost perspective, sure. Like you should obviously be concerned about that today. Like if it's going to cost you $1 million a month to post to a certain location, maybe don't post there, post somewhere else. Or if it's going to make the user experience awful, then look for a different spot. But otherwise, I think it's you find the right spot for it today, and then if you need to move it later, then you move it.
I just thought it was so funny that like this guy basically told the people who built what he was asking for. I was like, hey man, why did you do it over there? And it's like, I bet
And
they
I'm
don't even.
sure, I'm sure
They
they
don't.
had those considerations in mind, right? Like they wanted it to be cheap and fast so that like a lot of people could use it. And
That's literally it. They were like, oh yeah, like we just wanted someplace cheap and fast. But you didn't consider the on-chain economy, man. Like, shut the hell up.
Well, they used to. I mean, the ETH, like the hardline ETH perspective was like, oh, we have all the TVL. It hasn't been true in the case of Arbitrum, right? Like if you're sitting on Arbitrum, you have less TVL there than Solana. So they even have that argument anymore. And it's like kind of a bridge is a bridge is a bridge. You can bridge from ETH to Arbitrum. I can bridge from ETH to Solana. Like who cares?
if your app is good enough, then like you're saying, people will be willing to move their funds over.
Yeah.
Yeah.
It works in the trad markets too. Like if I want to use Robinhood, I got to deposit. If I want to use Fidelity or XYZ place, like I got to move my money there.
I don't want to shit on Ethereum too much. I feel like we do it every week. But yeah, I agree with you. I mean, my like biggest thing is that I feel like we're wasting the capital on Ethereum. Like there's $45 billion on that chain, and if you're not using that chain, that money's just being wasted. Like that's the most money that we have on chain. And if you're an app developer, you should want to access that. And like you said, if you build on Arbitrum versus if you build on Solana, you're still accessing the same. Like there's only 10,000 people on chain, and everybody knows how to use Bungee and Across and dBridge. You don't need to. Whatever. No more Ethereum talk. Um, I think we're gonna keep it short today. The second thing that I wanted to talk about is Sui and Aptos. Sui's just been doing fantastically. Like off the bottom, I I don't want to pull up charts on 0x research. That's not really what we want to do, but I do want to give Danny the opportunity to talk a bit about which one did you shill, Sui or Aptos? Which one do you like better? Which one do you think can get you the next 100x?
You write me out the script, and I'll load it up for you.
I'm
Yeah, I mean, I think there's some key points like of interest. We've seen, regardless of the price action, I'm kind of ignoring that as for part of the intro of this discussion, but I think we saw Sui, I think, as like an on-chain ecosystem, on-chain economy perform, I think, fairly well earlier on, like maybe months back, relative to Aptos. But I think recently, over the past few months, like that has come closer to equalizing. Like they're doing, as far as last look, relatively similar, like DEX volumes, looking at fairly similar TVLs, like within the same ballpark at the very least, I believe. So, I think the question comes down to, there's some similar tech at play, not that they're like the exact same thing per se, but you're dealing with, the move language across both. You're looking at fairly similar on-chain economies today. We've seen like the market sort of chatter about, Aptos conferences being empty, but Sui, events being, full houses. I don't know if that's still the same with the recent Aptos Seoul Korea event. Maybe that place was a packed house, and maybe that changes that thought going around. But um, I do think one thing that is very difficult is there's a ton of similarities between the two. Um, and at this point in the game, like a lot of the apps are going to be the same, copy paste things that exist in all DeFi ecosystems today, right? You're going to have your lending markets, you're going to have your DEXs, you're going to have your LSTs, you name it. And there's not going to be anything super duper unique at the moment, outside of maybe what people are thinking about building into the future. I think Sui has at least an interesting idea of going after this gaming vertical with the Play device, kind of similar to what Solana explored with the Saga and now the Saga 2, going after like a unique market and trying to kind of capture users in that way and kind of tie them into the ecosystem. But it's relatively early, and like the metrics, I think wouldn't really swing you super hard one way or the other, nor would the tech.
Yeah, I for like to play Aptos advocate, they've been focused on um real world asset stuff, I think, majority, versus Sui. Like you said, like Sui took that. I mean, Sui, like they did this fantastic incentive program, probably the best case of an incentive program I've ever seen, back in October 23. So it's been nearly a year now. 180 mil in Sui, I think. I'm not sure if it's in dollars or if it's in literal like Sui tokens, on chain. And it, like, obviously, like you said, both chains, they don't really have that much. For what it's worth, I think Aptos has a bit of a more well developed ecosystem. Like there's a very clear, Solana had Jito, and like it also had a bunch of other stuff, but like Jito was the Solana app, especially like going in to 2023, 2024. I think Aptos has a few contenders like that, and the big one is like Phala. Obviously, there's other stuff. Luke recently wrote a report that is outlining all that as well. But I think the Sui ecosystem has been relatively a bit like less well developed, even though they have more TVL on that chain. So it's a bit surprising. But like I said, I think that's mostly the incentive program, and they've done a really good job. But more so, what I wanted to ask is, there's very clearly, like, the move language is semi-attractive. Ryan, would love to hear your thoughts on how languages might become more important. But more so, what I wanted to ask is, how do you view that new L1 coming in? Because we hear about this all the time. Is like there's another opportunity like Solana. Um, will there be another opportunity like Solana? And I'm curious as to if you guys think that Aptos and Sui could present this, or if any other L1 could present this, and what it would require. Both of these teams and these blockchains are very well funded. The language in itself technically makes sense. It's like, at least as far as I understand, it's relatively easy to write. It's not Rust in its popularity or Solidity and like its tooling, but it is like purpose built for smart contracts. So I'm wondering. I guess I'm just wondering, like, should I go 100x long Sui Aptos or no? And if I do, when should I do it?
You're not going to get another chance like Solana because the thing about Solana was that it kind of came to market before people like applied this like L1 base layer valuation premium to everything that came on the market. So, the ability to buy one of these things at a $200 million fully diluted valuation is not going to happen. Um, and I think that, look, on a forward looking basis, so okay, so what does the next Solana mean? Does it mean like
I
10 to
think that
100?
was more of a bait thing that I said. I guess I just more so meant, like, do we have another big L1 trade where you can capture 20, 30, 40x or whatever you're looking for?
Yeah, I mean, it's pretty interesting. Like I look at what's happened with Pump.Fun. Like, no doubt we're going to play the rotation game, and we're going to do different apps and different ecosystems until we get tired and lose all our money. Um, the Pump Fun thing has lasted on Solana for a long time in crypto time, and it recently like kind of left to BNB and Tron, and it's my understanding that it's kind of rolling over now. And like I think the problem with these other ecosystems is just there's nothing else novel to do. The only place where you have novel experiences is arguably ETH, Solana, Arbitrum, maybe Base. Um,
I definitely put base there.
yeah, so it's like it's really hard to compete in the L1 market. It's extraordinarily crowded. I think I might have said this on the pod a week or two ago, but like how do you compete nowadays? Like there's not a clear wedge in the market other than these current ecosystems compounding their current markets. Um, Maybe one wedge exists. So, like, when I think of these wedges, like historically, they've been like ETH has had the liquidity. It's hard to compete, impossible to compete with that. Um, Solana had the speed when everyone else was slow and the low fees. That was their wedge into the market. Um, there's also like this problem in crypto where founders get very religious. You can think of things like ETH alignment as like one of these like religious beliefs where people will ignore like the writing on the wall and just like stay like strong headed in one direction. Like perhaps like that's mega ETH's wedge into the market. Like if Arbitrum is just like we're not going to increase our block times because for whatever reason our current technology stack is God's chosen stack. Perhaps like that's like a way that one of these L1s compete because like realistically, like if you think of something like Mega ETH coming to market, and let's say that it was actually able to attract more liquidity because it's a juice system, it's like very like good for market makers to provide liquidity there. Arbitrum would just juice their tech stack too and compete, but like, are they going to do that? Like, I don't think so because it's not in the
No,
ethos, right? So like
I
potentially
don't think
that's a
that.
wedge. Yeah, potentially that's a wedge. Is just like the bias of a lot of the market. This like kind of like religious bias towards like their current tech stacks or like current roadmaps. Um, but other than that, like there's not a lot of wiggle room for new L1s to like come to market. So like, do I think that Sui and Aptos can achieve like $100 billion market caps? Like it's way harder today um, to get there. I think it's more likely that current ecosystems keep compounding, with the exception of like the strong-headed ones that are really committed to their roadmap at the expense of evidence.
We're also going to get. I agree with you mostly. What my thing is that I feel like we're also going to get more exciting L1s later this year. Um, Chain, for whatever it's worth, I feel like they're trying out some new stuff and they have a really strong community. Whatever that means pre-launch, but like at the end of the day, they are like a bunch of people posting random stuff, and they did shut down the test in the initial try because everybody was sibling it. So I'm sure they'll have some. interest. Same with Monad. Whatever community means pre-launch. We'll see what happens after launch, but it is interesting and it's at least like equalized.
I do. Yeah, I want to add to that. I think I like Ryan's point about the wedging, and I do think that like if you look at like a monad or a mega ETH versus something like an Aptos or a Sui, we have sort of a different kind of paradigm that we're looking at. Like Aptos Sui, I think you're looking and comparing to like how do they break out in comparison to Solana, the other like Altel one fast cheap chain, and they've taken that like maybe another one or two orders of magnitude further, right? Cheaper and potentially faster. But we see Solana like continuing to compete there, right? Like they're trying to pump out Fire Dancer and get more TPS. So it's like that's going to be a battle, an ongoing battle that they're going to have to play at, and it's going to be difficult with like as a user of Sol today. It's so cheap that I don't care. Like I don't care to save pennies on my transactions by going over and like using Aptos or Sui instead. It doesn't really matter to me. For a monad and like a mega ETH, I think Ryan's point is pretty good. Like, you know, base I will say is they do have some pretty interesting targets. Like Jesse Pollock himself has posted some pretty crazy targets in terms of like mega gas per second for the chain and like significantly increasing throughput. But like we're not seeing Arbitrum come out with proposals to get to 10k TPS on the chain today. They're doing, they've got all these other like orbit chains that I think that's sort of their method of scaling is kind of the L2 model, but instead it's L3s. So I think there's a possibility that like a monad or a mega ETH, like if they come out with like these EVM aligned like 10k TPS chains, like they have the opportunity to kind of do the Sol play in that you come in and be the fast cheap alternative, but like within the sort of religious like EVM aligned community to where you might actually have the ability to move over more significant capital from L2s and even the main chain today because people think it just like fits the religion a little bit more. And they have the opportunity to build out these unique apps that we have on Sol today that don't exist on L2s.
Yeah, agreed. And I think that like attempt to go, okay, I feel like a lot of people don't like the EVM and they're like, oh, Solidity is like old, so we don't really need it. But I don't think the attempt to fix that is to say, oh, like here's actually just like another language that is exclusively smart contract focused. That's like kind of has a very small community and not fantastic dev tooling. It makes a lot more sense to do whatever Arbitrum is doing, where they're like they have stylists where they have like you can write in Rust, C++, C Sharp, whatever. Solana, you can write in Rust, relatively popular language, as opposed to going with like a very niche, safer. They're as far as I understand, it's much safer and much harder to hack. But even then, I'm not sure if it's worth it.
Yeah, it's unclear today, right, if the language enables anything super novel in
Yeah,
DeFi, right? Like whether or not we'll see really significantly more interesting apps via the use of the move language that the other languages can't do for some reason. That's kind of up in the air. So that might be a potential future kind of value point for them, but we don't see that today, so it's hard to say.
yeah,
I will say all of these massive, L1s, they've got plenty of money. And like you're saying, like if you can get people that write multiple different languages to come and build stuff on your chain, like that's great. Ultimately, you just want to have devs come and build like unique, interesting product
yeah,
experiences on your chain because that's why users are going to come and bridge their money over and like use your stuff.
yeah.
Solana had all these teams come out of the bear market and build unique things that weren't happening on ETH, and that's kind of a piece of their success. Ultimately, for like an Aptos, for a Sui, for a Monad, for a Mega ETH, like they need to put some of their partnerships and capital to work and like get devs to want to come and build in their ecosystems and build stuff that's unique.
For what it's worth, I think Solana didn't have that many interesting apps, and it still doesn't. It just had like a massive repricing event just because it was beaten down. But it is still the second, I guess, most like innovative ecosystem.
Yeah,
With
I think in their case, like the speed and throughput
yeah,
improvements were sort of enough to kind of fill that gap. Like they
yeah,
didn't have 50 brand new incredible experiences, but with just a few and just having them be greater from a user experience perspective. Like I think that was just sort of enough, but it's not enough anymore, right? Like you can't, Aptos and Sui aren't going to make it just off of that alone.
Yeah, I agree with that. Yeah, I think that's it for today, guys. Danny, do you have anything you want to add?
Don't get chopped up. NFA DYOR. As always, don't take any of Box advice about 100x long or short.
Nothing
He's
is
crazy.
advice.
Trade with leverage. Keep your stop wide. Don't
Take some
focus
risk,
on
man.
targets. Multiples are irrelevant.
Double down if martingale down, man. until
It's all going up, so don't worry, man.
Cutting losses is for losers.
Yeah. We have a guaranteed 4-year cycle. Don't fuck it up. NFA.
Just look at the chart for 23 and then mirror that onto 24, and there you go.
Yep, exactly. Let's put the 1 second chart over here for whatever our producer is trading at the day. Guys, thank you so much for coming on. To my listeners, to our listeners, to the 0x Research listeners, you make it possible. Make sure to come to Permissionless. It is in October, early October, when the leaves are turning. And you can use code 0x10 to get 10% off. Ryan will be there. Danny will be there. I might potentially make an attempt if Ryan says, can you please come back? Unless he does that, I will probably not come. Fantastic. All right, we're good.
I won't be there, but another Dan or Daniel will probably be there.
We'll
we got
have
plenty
one.
of Dans.
We'll have one Danny.